How's it going, everyone? Welcome back to another Hbar update, and I've been predicting these moves absolutely exactly. Now, over the last few updates, when we saw the double bottom neckline lost on the liquidation event, everyone needs to understand the black and white rules of trading, which is just basic support and resistance, previous highs, previous lows. And when we saw this breakout, which went up to 30 cents, there was a massive pullback that has lasted the last few months. And that pullback came back to test the W neckline to see whether the bulls will step in. Unfortunately, we had that liquidation event outside of our control, and this now meant that price has and HBAR has deviated from the bullish path. The expectation, as you can see, would have been 35 cents, whether you looked at it as a double bottom, retest for continuation higher, or just off of this low, looking at it as a bull flag or a bull pennant. Unfortunately, the major key level of support didn't hold up for the continuation to my 35 cent target. But almost every single update, even though the market has flipped bearish by creating the bearish crosses simply due to the liquidation event pushing through all the support moving averages, flipping them into resistance, this means I can't have that 35 cent bias in the front of my mind, because that target, we've deviated from that target. It's not the expected path. Technically, any pump should get rejected and continue lower. That is what I warned the following days of the liquidation event, that the pump up everyone was getting excited about. I was one of the only ones keeping a level head, making sure you guys were well aware that there would be another test of the bottom. And there was actually a lower low a couple Fridays ago. But Bitcoin over that weekend recovered it and confirmed its support. That is why we saw the relief rally on HBAR. And last week I was calling it a relief rally because the risk is that it could just pump to the range high and reject once more. Technically speaking, it still needs to break past the moving averages, although it has broken out of this current range. That gives validation to what I was saying last week, confirming what I was saying last week and what I've been regurgitating in my Discord on a daily basis. Check it out, link in the description. For that or education, there's a 30% discount at the moment. But with this double bottom over here, on the second leg, a micro double bottom formed. This was giving us that bias once we'd seen the breakout that we would see continuation to the highs, as that was the expected target. Now that it came into that expected target, another double bottom has formed. By breaking beyond this point, you're validating the next target, which you'd actually see it break beyond the moving averages. Now, please understand the moving averages are currently resistance. They're bearish signals, being these bearish crosses over here, multiple of them. We're slowly trying to invalidate them with this bullish structure down over here. If I quickly remove all the drawings, you can in fact see that we're starting to see bullish crosses thanks to this blue moving average crossing over once more. We're trying to invalidate this potential final bearish cross, the only one left. It only will do so with an EMA repel. So we need to see them not cross over. That's only going to happen with a slingshot back above it. And we're pumping up into that area right now. Ultimately the key level of resistance, which was the previous double bottom neckline. For the 35 cent target to get validated again, for this all to be a deviation and a false breakdown, the moving averages have to get recovered before the bearish cross. Now, even if we see a rejection over here, I just want to hold this low that we've just built up from, and maybe at the worst case just test that neckline of this micro double bottom. But the shallowest rejection means that HBAR might just fall back to 19 cent here before a further break. Just understand that once you see all moving averages recovered, once this neckline of the double bottom is recovered, 35 cents is next for HBAR, and that would be my bias that I'll continue to say on a daily basis, just like this double bottom that I've called for, but understanding the risk that technically with the loss of the moving averages, technically need to think that potentially this could still be a trap. I need to have that bias changed with proof. I need to see with my own eyes this area flipped into support. Then I have only one thing at the front of my mind, 35 cent as the next direct target. Like, subscribe, comment and share. If you wanted to learn my strategy, use the links down below. Take action on this 30% discount while it lasts until Friday the 7th of November. This can be applied to my Discord, ebook or one-to-one mentorship plans. So check them out and I'll see you over there.